Hi friends, good morning all. Welcome back to CAP classes. In today's video lecture, we are going to discuss about internal controls and various types of internal controls. So, if you remember, in our previous video, we have discussed about internal controls. So basically, what is the concept of internal control? Simple. Management is responsible for various things, for operations, for reporting, and for compliance. So there are different levels of management. So if you know, there is one top level, middle level, lower level. So top level management is also known as corporate level management, and then we have divisional or business level management, and then we have functional or operational level management. So when we have different levels of management having different levels of responsibilities, and while fulfilling their duties, whether they are accountable. Are they accountable? So to whom they are accountable? They are accountable basically to shareholders. They are accountable basically to owners or shareholders. So take one manager. Now the question is he fulfilling his responsibilities properly? Whether this manager is he fulfilling his responsibilities properly or no. So usually what are the responsibilities of managerial level people? Are they looking after their operations properly, like efficiency and economy, and effectiveness in what they do, utilization of resources optimally, reducing wastages, reducing this weaknesses or limitations what we call, and then focusing more on the profitability, increasing profitability, then reporting of various information like financial information, non-financial information, whatever the records they generate, whatever the documents they prepare, are they proper, are they accurate, are they timely, are they reliable? So this is second one. Third one is, are they complying with law, regulations, and internal policies? So there are so many policies internally in the company, like it could be HR policy, it could be quality controls, it could be budgetary controls. So are they following it? So all these things are basically the responsibilities of management. So to fulfill their responsibilities, there will be so many plans, policies, procedures, processes, programs, various things. So these plans, policies, procedures, these are known as internal controls. So basically internal controls are nothing but the plans, procedures, programs, processes adopted by the top level management. It could be guidelines, it could be directives. So these are the internal policies of management to ensure that the workflow is proper, to ensure that the reporting lines are proper, and to ensure that the compliances are proper. So in today's video lecture, we are going to discuss what are various types of internal controls. First, try to understand there are 5 types of internal controls. There are total 5 types of internal controls. First one is called preventive control. Preventive controls. Second one is called detective controls. Detective controls. Third one is known as corrective controls. Fourth one is known as directive controls. Fifth one is known as compensating controls. So if you observe these 5, we can have a memory code PDCDC. Preventive controls, detective controls, corrective controls, directive controls, and compensating controls. Now let us discuss what these things are. So have you ever seen any jewelry shop or any supermarket or any retail chain? It could be like Reliance Trends, or it could be like TBZ Jewelers, or it could be like Kalyan Jewelers, something like that. So imagine you own one jewelry shop. There is so much of inventory, so much of gold, so much of diamonds, so many articles, so many valuables. and you have say 100 employees working in this store. So these 100 employees, they could be new employees or they could be old employees, whoever, whatever the category is, whatever their level or status designation in the organization is. So basically you have 100 human resources. Now you have got a doubt, what if any of my employee steals any article of gold or diamond, secrets that in the pocket, keep something in the pocket, and then they will go out of the store with this. So they can cut the tag also. So that barcode also, if it is not there, even your metal detectors and all cannot detect that there is one ring in the pocket of this employee. How can you control these kind of things? So first remember, prevention is always better than cure. When something happened, after that don't cry. Don't allow it to happen. If you remember our discussion on frauds and errors or misstatements. So these misstatements will happen when there is an opportunity. Frauds happen when there is an opportunity or a pressure. So what is an opportunity? An asset in front of eyes of a human being without any control, where the asset is vulnerable and this person is in a position to take or misuse the asset. For example, cashier sits with huge amounts of cash. Consider in a bank there is a cashier and there is some 2.5 crore rupees of cash in front of his eyes. 2.5 crores. Actually in bank cash balances will be much more also. So now what happens? This cashier earns 20,000 and for him to earn 2 crores it takes 100 lives. So if there is no control on cash, or if there is no control on this human being, what if because of human tendency and because of the nature, he feels like there is so much of cash around me, no one is looking at me, no control is at me, so I will steal this, I will misappropriate this and I will run away. That should not happen. So there should be a control. Now remember, human beings will behave in a proper manner when they are controlled. When there is no control, or when there is no process or standard operating procedure, SOP we call, or when you do not give key responsibility areas, KRA, these human beings won't behave properly. For example, observe any human being, including any person, including you, including me. When you are riding a bike or when you are driving a car, there is a traffic signal and there is red light. What does it say? It says, boss, stop. Wait for your turn. When the green comes, then you can start again. So the light is saying 180 and it is counting down 179 seconds. So will you wait up to it becomes 0? In the morning 6 o'clock when no one is there, you looked around, there is no CCTV to capture your photo, there is no traffic cop, there is no traffic, there are no many people also. So you have taken it very light and you increased the accelerator, you pressed it and then you started going. The same traffic signal, same human being, if you are crossing that signal in the evening 6 o'clock, where circle inspector is there or sub inspector is there, 10 home guards are there, constables are there, they are, stopping each and every vehicle and they are verifying all the papers. If that is happening there, will you jump the traffic signal? No way. Now tell me, what is the difference? Morning you are not Satan, evening you are not Jesus Christ. But the same day this happened with you because of control. So the presence of traffic cop is a control. So in an organization, the traffic cop is internal auditor. So now try to understand, when we have a beautiful system of law, rules, regulations, guidelines, everything is there. Why do we need traffic police? We have Motor Vehicles Act, we have traffic signaling system. So the law is proper, the policy is proper. Why do we need a police? If police is not there, no one will respect law. No one will adhere to regulation. No one will respect traffic signal. No one will listen to it. So in the organization also, there are 2 requirements. Step 1, you should have controls. Step 2, you should have internal auditor to monitor whether controls are implemented properly or no. So internal auditor plays the role of traffic cop. Internal auditor plays the role of traffic cop. Whereas external auditor is like, external auditor is like judge. Internal auditor is like police. So external auditor role comes after the transaction has happened. So the transaction has happened 6 months back. That sale, is recorded. Today I will verify whether the sale, that journal entry is correct or no. So it is a kind of post-mortem. External auditor or statutory auditor, whatever you call, he does post-mortem. 6 months back something happened, I'm verifying that. But internal auditor runs through the organization to see whether the transaction which is happening now, the operation which is happening now, is it according to the policy, procedure, authorization or no. So he verifies that. So as I told you, always it is better to prevent something, but you should not cry after this has happened. Prevention is better than cure. So the first type of control is preventive control. Coming back to the jewelry example where there is one employee, there is a risk that the employee will take one ring into his pocket and then he'll go. So they will have one control. What is that control? Exit security officers. So exit security officer. So when the employee is leaving the organization, when the employee is leaving, his work is over, he is leaving now to home, then they will search his pockets and all. They have a procedure and then only they can go home. This is a preventive control so that employee cannot do any fraud. Even in shopping malls and all, if you see, even in Big Bazaar or Hypermart, these kind of things, when you are coming out of the store, the exit gate will have a security officer, security guard. They will ask you, show your bill. When you give the bill, they will look at your bags, they look at the bill, they put one paid stamp, exit stamp, and then they'll say, please go. That is also a control. To ensure that no one is taking goods out of the store without a proper bill. Billing should be done. Only after that you are allowed to go outside. So this is a preventive control. And another preventive control is in banking sector, CIBIL score. CIBIL check, credit worthiness. So one person went to a bank and he has given loan application and said, sir, I am working in Accenture. My salary is 2 lakhs per month. I need 1 crore rupees of housing loan. Banker is ready to give this loan. But before that, you should check what is the background of this person. Whether the documents he has given are genuine or no. In his track record or in his credit history, has it ever happened that he borrowed money and he evaded? He missed some of the EMIs. He did not pay, amounts properly. After that, it went to settlement. It went to legal case. So all these things will be reflected in his CIBIL report. So the banker will see his CIBIL report, which runs from, -1 to +900. So only when your CIBIL score is above 700 or in some cases above 750, this is the area where usually they give loans. This is the area usually they give loans. If your CIBIL score is less than that, they will reject it. Why? Potential bad debt. It is potential bad debt. So to reduce non-performing assets, to reduce bad debt losses, first credit check is to be done before extending credit, before selling goods on credit, or before, giving any kind of loan. This is a preventive control. Background verification is a preventive control. Credit appraisals, credit checking is a preventive control. Another preventive control is segregation of duties. Segregation of duties. So what is segregation of duties? If you remember, in internal controls, there is a rule. There is a principle. The custodian function and the recording function shall not be performed by same person. What is that? Custodial function. So what is this? Custodial function. Record function. These two cannot be performed by same guy. So if you see, take cash. Who's performing custodial function of cash? Cashier. Who performs record function? Accountant. Cashier cannot prepare cash book. Cash ledgers and all will not be prepared by cashier. Cashier will prepare, daily cash receipts, daily cash payments, some, documents he will prepare. He will handle the cash. He is the custodian of cash. Inflow of cash, outflow of cash will be handled by him. But my dear friend, he never prepares cash account or cash books. That will be prepared by accountant so that cashier cannot do a fraud. Then second one is stock. In case of inventory, who prepares priced stores ledger, who prepares inventory records, who has the physical custody of inventory? This storekeeper is the physical custodian, and cost accounting department, management accounting department. If costing and management accounting department is not there, regular accountant, they prepare stock records, like priced stores ledger and all. So storekeeper is responsible only to safeguard, to protect stock, to maintain stock and to take care of stock. So he cannot record quantities, he will record quantity of goods received, quantity of goods given to production department, all these things he will record, but he will not account for stocks. Accounting of stocks, purchases, issues, sales, everything will be done by accountant or cost accounting department. So now what you are doing, you are taking one transaction cycle, you are cutting that into two. So you are giving only one part of the responsibility to one person. That means one transaction will be performed by 5 different people, so that no one can do a fraud. This is a preventive control. So what are the preventive controls we looked at? Exit security officers, then CIBIL score, then segregation of duties. Like that, if you discuss, there are so many types of preventive controls. So in this video, I gave you little bit of information about the internal audit. What is internal control? What is the role of internal auditor in a company and what is the role of external auditor in a company? Remember this sentence: external auditor is a judge and internal auditor is a police officer. Internal auditor's presence is required so that internal controls, policies and plans are properly adhered to. Compliance with the internal policies, internal controls. So internal auditor is necessary for that. And then I told you that there are 5 types of internal controls, starting with preventive control, detective control, corrective control, directive control and compensating controls. So these are 5 controls, and we have discussed about preventive controls in detail in this video lecture. So in my part 2, next video, I will be explaining you detective, corrective, directive and compensating controls. Thanks for watching Cap Classes videos. Please do subscribe, like and comment our videos, and please share these videos with your friends also. Thank you so much. Have a good day.